Imagine a new kind of financial institution, one that isn't built on the old familiar banking system, but on cutting-edge tech and the power of its community. What would that even look like? Today, we're taking a deep dive into AICX, often called AFX. And our sources suggest this company could actually be a blueprint for just that kind of new era financial institution.
Yeah, and what's really interesting, I think, about the info we're looking at today, it comes from a YouTube video transcript, is how grounded it is. It sort of deliberately avoids future promises, the usual marketing hype.
Right.
Instead, it focuses really carefully on what AIFEX has already done, the solid structures it has already built. That focus on action, that's what we're going to unpack.
Absolutely. So our mission here isn't just speculation. It's about really trying to understand the strategic thinking behind what AIFEX is doing, highlighting its unique strengths, and maybe exploring its potential. We want to give you a clear, insightful view of why this company seems to be making waves, looking at it like a shrewd strategist would.
Sounds good.
Okay, so let's start where any strong company does, the foundation. Our source really points to AIFEX's significant investments in its core structure and the early market signals that came after.
Yeah.
This isn't just about ideas, it's about big, deliberate actions. What's the strategic play here, you think?
Well, what's fascinating, strategically speaking, is that AIFEX's initial approach, you could frame it as a heavy upfront investment, really focusing on building the ecosystem first.
For revenue, even.
Exactly. In a world often chasing quick flips, they clearly went for extensive groundwork before really thinking about immediate returns. That signals, a long-term commitment.
And when you look at that infrastructure, it's quite revealing. The source notes AIFEX chose to build on the Binance Smartchain, BSC, described as a large and fast blockchain. They didn't just pick any chain, right? And beyond that, they also created their own AFX USDI token pair, and this seems critical, developed their own stablecoin, USDI.
Yes.
Why are those choices, especially their own stablecoins, such significant strategic moves?
That's a really crucial question. Choosing BSC, known for speed and scale, that suggests a focus on future transaction volume, user experience, but having their own stablecoin, USDI, that's a powerful statement of independence.
Okay.
I mean, in the crypto space, so many projects rely on external stablecoins like USDT or USDC, and that introduces third-party risk, maybe regulatory exposure.
Right.
By minting their own, AIFEX gains, significant autonomy, control over their internal financial ecosystem. It's about minimizing reliance on others, building their own monetary rails, essentially. And beyond that, they put in an automatic compounding return system and, very importantly, have a clear IPO plan already mapped out.
Hold on. An IPO plan, like initial public offering, the traditional route for companies listing on, say, NASDAQ. In the crypto world, where we usually see token sales, decentralized funding, why would a company like AIFEX prioritize a traditional IPO? What does that tell us about their long-term vision?
That's a really insightful point. It's a huge strategic differentiator. You're right, most crypto projects focus on token-based funding, liquidity, often staying within the DeFi world.
Yeah.
AIFEX's explicit IPO plan. It signals a deliberate intent to bridge that gap between the decentralized digital asset world and, established, regulated financial markets. It's not just a wish list. It seems like a detailed roadmap towards legitimacy, towards traditional institutional integration. It suggests they aim to operate within established legal and financial frameworks. That adds a completely different layer of credibility.
So from a strategic analysis view, this heavy investment in infrastructure for clear revenue, it's a capital-intensive strategy, needs a lot of upfront belief.
For sure.
But in a fast-paced market, everyone's chasing quick wins. Isn't that incredibly high risk? What's that say about their confidence? How do they sustain that without quick returns?
That's a sharp observation. You're right, it definitely cuts against the grain, against that short-term mentality in many crypto ventures. It is inherently high risk, that massive initial outlay, the market volatility.
Yeah.
But the goal, clearly, is to create a strong, self-sustaining ecosystem. If they pull it off, it offers a significant advantage in the long run. Building a robust, independent foundation, not just a house of cards.
Okay.
This approach just screams long-game thinking, a deep conviction that the long-term network effect, user loyalty, the intrinsic value of their system, it'll eventually dwarf any short-term games they might be missing out on now. It's a calculated gamble on, perhaps, future dominance.
But all that groundwork, all that investment,
yeah,
it doesn't mean much without adoption, right?
Mm-hmm.
So The real test, and where it gets really interesting, is how the market actually responded.
Indeed.
What did those early signals tell us?
Well, the source notes that when they opened the AFX USDI pool on BSC, there was real trading volume, and it appeared quickly. It wasn't just, floating numbers or fake activity to look good. It seemed like genuine engagement from the market, reflecting immediate, maybe organic interest.
So that rapid volume suggests real initial market acceptance. And the source positions this quite cleverly as a tactic to intentionally create a vibrant liquid secondary market before even trying to list on major centralized exchanges,
Right.
CXs.
Right.
Why is that sequence build organic liquidity first, then the big exchanges? Why is that seen as shrewd, as well planned?
It's highly strategic. Look, many projects rush to list on big exchanges, hoping for that instant price pump.
Yeah, happens all the time.
But they often find themselves kind of at the mercy of exchange fees, market manipulation, sometimes without deep organic liquidity backing them up. By building a strong, active local economy on BSC first, AIFEX is basically proving its model, establishing genuine market demand before stepping onto the global stage. This reduces dependency on those external platforms. It builds inherent strength. And that makes them a more attractive, more stable proposition for the top-tier CXs when or if the time comes. It's like a startup proving product market fit in a small town before going nationwide.
So for you, our listener, these actions really show some very serious strategic groundwork. It suggests AIFEX is building for the long haul, focusing on stability, a well-thought-out plan, not just fleeting trends. That should definitely catch your attention if you're looking for, sustainable innovation in digital finance.
Yeah, absolutely.
Okay, so we've seen AIFEX laying down serious groundwork, building for the long term. But, what good is a strong foundation if people don't trust the building?
Good point.
And that brings us right to what the source highlights as AIFEX's really game-changing commitments, especially around user rights. What's so bold about these?
What's truly fascinating here is just the audacity maybe, and the transparency of AIFEX's public commitments, and how they seem intrinsically tied to its future success.
Oh.
They're not just making vague promises. They seem to be making legally binding statements, which is frankly pretty rare in this industry.
And the big one, the one that really jumps out, is the coin-to-equity conversion rights.
Yes.
AIFEX has publicly stated that users will have the right to convert their coins into actual equity shares once the company successfully lists on, say, the Hong Kong Stock Exchange, HKEX, or NASDAQ. You mentioned this is a big deal, but, in a space that's still pretty murky regulatory-wise, especially across borders, how much practical weight can these conversion rights really carry? What's the real difference here compared to other projects?
That's a crucial distinction, yeah. It's highlighted as a big deal, precisely because it explicitly ties into real legal frameworks. That differentiates it dramatically from the usual, sometimes empty promises we often see.
Okay.
Think about it. So many projects are built just on white papers, community governance, promises of future utility, often with very little legal recourse if things go wrong. AIFEX, by putting these commitments seemingly under the umbrella of legal IPO structures on established exchanges like HKEX or NASDAQ, they're essentially saying, look, we're not just building code, we're building a legal entity designed for long-term accountability.
Right.
This commitment implies significant legal planning and expert consultation must have happened behind the scenes. It indicates a robust, serious strategy, a far cry from the, trust us bro attitude you sometimes see. It fundamentally shifts the nature of the investment from just a speculative token to a potential ownership stake in a legally recognized company.
You're absolutely right about the strength and credibility that kind of promise carries. It really speaks volumes about their confidence in their own path and their willingness to actually share that success with their community.
And that confidence is kind of reinforced by their staggered vesting or unlock mechanism for user returns.
Okay, explain that.
Well, for users, the returns are tied to specific major company milestones. Your principal comes back upon a successful listing on HKEX, and all returns get unlocked upon a successful listing on NASDAQ.
Wow. That's a powerful incentive structure.
Yeah.
The source says this mechanism is typical of models used by companies preparing for IPO. It directly binds the user's financial future to the company's future success.
Exactly.
Why is aligning incentives like that so strategically important for AIFEX?
Well, it fosters a really strong bond, right? a deep alignment of interests between the company and its community.
Mhm.
It basically transforms users from just passive token holders into invested stakeholders, almost like early employees or angel investors whose returns are tied to the company hitting major milestones.
I see.
This is a very smart strategic move for long-term growth and stability because it incentivizes the community to actively, maybe even contribute to the company's success. Knowing their own prosperity is directly linked to it. It builds loyalty, a shared sense of ownership.
So what this all means for you, our listener, is that these commitments really showcase AIFEEX's profound confidence and a long-term vision that directly includes its community. It seems to be about building strong, maybe unbreakable, trust and incentivizing shared success, which is arguably a powerful and perhaps sustainable model for a new kind of financial institution.
It definitely seems that way.
Now let's explore this intriguing concept the source calls AIFEEX's quiet giant strategy. It reflects its long-term vision. It's not about being the loudest, chasing hype cycles. Why would a company in such a fast-paced, often really noisy industry choose this quieter approach?
Well, if we connect this to the bigger picture we've been discussing, a quiet, deliberate approach actually contributes significantly to AIFEEX's overall power and its credibility.
Okay.
It's a conscious choice, it seems, to operate differently from many others who often rely on really aggressive marketing and just trying to get rapid member growth.
I see what you mean. The source observes AIFEEX is not in a hurry for quick profits. They're specifically noted as not doing large-scale token sales or focusing on rapid member growth, like, multi-level marketing MLM schemes.
Right.
Instead, they prioritize building understanding and trust gradually. The force even draws parallels to the early foundational days of established players like Binance or Solana. That's a pretty strong comparison.
It is, and it's a crucial distinction. Their approach kind of aligns with that old saying, talk less, do more.
Yeah.
They release features gradually, not revealing everything at once, but only what's truly ready, what's robust. For those who, as the source puts it, see the big picture, this isn't about creating FOMO or fleeting hype. It's about substance, demonstrable progress.
Right.
This quiet power seems to come from a deep conviction in their own fundamental value, the quality of what they're actually building.
This really demonstrates long-game thinking. AIFEX prioritizes brand trust over short-term hype. That genuinely differentiates it from those come quick, go quick projects that pop up and then fizzle out just as fast.
Exactly. Their focus appears to be squarely on product and technology development behind the scenes, rather than just flashy marketing campaigns that promise the world but often deliver very little.
Okay.
This is the essence of what the source calls quiet power. A confidence that comes from the tangible strength of what they're building, their robust infrastructure, their legal foresight. Rather than just what they're saying in a white paper or a marketing pitch, it's a sign of, profound patience and strategic discipline.
So for you, our listener, this deliberate, less flashy approach might suggest a more sustainable, maybe more reliable investment. It seems to be about focusing on intrinsic value, building long-term brand equity, rather than chasing fleeting trends or speculative bubbles. It's a testament to patience, strategic foresight, trying to create enduring value in a notoriously volatile market. So what does this all mean when we piece it together? Our deep dive into AIFEX, it highlights a company that, according to our source, puts immense credibility on its tangible actions.
Right.
Its foundational infrastructure investments, the innovative structures it's meticulously built, the unique, legally backed mechanisms it's put in place. These, the source argues, are simply more credible than just words.
And this emphasis on concrete action, it strongly suggests AIFEX might genuinely be paving the way for a new financial institution model, one that could operate independently of traditional banking systems, and is instead powered by cutting-edge technology and its user community. It's a pretty bold vision for decentralizing, maybe reimagining finance, not just as a passing trend, but maybe as a foundational shift.
Which naturally raises a pretty important question. Can a financial institution built mostly on technology and community almost without relying on traditional banking rails?
Yeah.
Can it truly become a new global financial standard in the future? And what are the real long-term indicators of success for a model like that, beyond what we've seen in these initial, though quite compelling insights?
That's a truly compelling thought, isn't it? It challenges our whole conventional understanding of finance, the indicators of lasting success for such a model. Well, they might indeed lie in its ability to consistently foster real utility for its users.
Okay.
To cultivate robust, loyal community engagement demonstrates sustained technological innovation that actually addresses real-world financial needs, all while somehow navigating the complexities of integrating with the existing global financial systems.
Exactly. It's a huge undertaking. We definitely encourage you, our listeners, to keep a close eye on this evolving space. The future of finance is clearly unfolding right in front of us, potentially led by fascinating new players like AIFEEX, who are building things in ways we haven't really seen before.
Absolutely. Fascinating stuff to watch.